that probably is not talked about as much.
Sure. The stock of the last week has been JSW Steel. I mean, what have you made of this complete collapse in some of the metal names, mining related names?
My own sense is that one large owner of the stock, maybe a large fund, and names are not that relevant, has just decided to exit because he saw the newspaper readings as being more than just a normal reading. But if you ask me, I think it's a company that will do whatever is it, 12 or 14 million tons of steel. Yes, if there was a blanket ban on iron ore mining and they actually had their inputs cut off, it's a different story altogether. We don't know how long it will take, and I think good sense will prevail, and maybe whatever the allegations are will probably be put to rest. But I think it's a great company, and the valuations have come down to dramatically attractive levels. I mean, if you like steel, it was not that far back that JFE, I think, came in at 1,500 rupees. The promoters have increased stake at 1,200 rupees. We've tracked this company since 2002. 2002 is when our coverage in JSW Steel began. We don't own any JSW Steel, but I think at current levels it's mouth-watering. I mean, I'd be tempted to say that we are closer to a bottom than anywhere close to a top.
What's your sense of how long this whole thing drags on, Jakes? I mean, earlier we were thinking maybe closer to Diwali we start getting out of the woods. How long has this pain got postponed till, you think?
Difficult to say. I think new things are coming up. I mean, in the debt ceiling thing, people saw one thing before the announcement, and now they are seeing a serious case for a downgrade. I mean, these are the sort of announcements that people are foreseeing right now. So, in an uncertain world of this kind, I think we need to go back and say that in our cocoon, we can remain comfortable up to that point, but if the world around us were to collapse, it's a different story. My own sense is that what the spending cuts that have been proposed are long-term good for the US. Maybe in the short run it creates problems. I also think that, if you see movements like gold, etc., it gives me a little hope in the market that maybe the final fling on the gold rush is happening. $40 movement in one night, and it's been happening. The stubbornness of oil to remain at these levels despite the realities of the world. So maybe some of the speculative bubbles here will burst and a little more sense will prevail. The one market which for the last 12-15 months has got no money is the equity markets. So maybe the contrarian play is here. So I don't know if the pain has got postponed, but if the sort of flashpoint of events is as dramatic as it has been in the last few months, then who's to say how long this pain will continue. But I think markets are smart at the end of the day. The dollar started dragging.
They're smarting too.
And they're smarting too, big time, no question about it. But I think that if one had to be in any of these markets right now, I'd probably rather still be in the equity markets than in the commodities, etc., where I know that maybe I'm participating in a bubble. That's what the way I look at it.
Yeah, don't we know it, Jakes? Every month we ask, so is retail back in the market? And there is a firm shake of the head saying no.
Absolutely.
Just on the point you were making about the upside being postponed though, Jakes, what is the upside potential at this point? Because I guess because of the events of the last few months, there is ambiguity on that as well. What is the upside potential for this market to your mind?
The upside potential is huge if you look at individual stocks or sectors that may suddenly come back into focus. So for instance, any of these names that we talked about, I mean, if some degree of clarity came through in terms of projects or in terms of some of these investigations being behind us, or just new projects coming through and normalcy beginning. I mean, what is to say a GMR can't go from 30 back to 40 levels, or a Lanco Infra from 17 to 25. These are big moves if you can actually time and get them right. Or a JP to go from 62 to 85. I mean, these are possible. I'm just giving numbers. But the index may still be stuck in this range because some of the MNCs may have corrected, may have come off. Reliance may have gone up 10%, but something else may have come down. I think, the problem seems to be because we are tracking something at a PE which is not representative of virtually any stock in the basket. That is making it very, very difficult to predict where the Nifty will go or come. I think, really speaking, I'm extremely bullish on the fact that there is so little participation in some of the spaces we talked about, and therefore I believe that if you just see the screen and see that the market may be drifting, it moves up sometimes on a couple of days of, the euphoria doesn't even last for a day and then the selling starts. Similarly on the way down. So maybe, this range will continue, but I think sooner rather than later people will start moving out of this Nifty obsession and going to some other spaces. And I think that may well turn out to be the time when stock pickers are back in reality.
The worry which a lot of people have, where even people who see value in the market right now is that this becomes a global bear market kind of situation because of because of growth slowing down dramatically, and you're strung out for another 9-12 months in this wilderness. How much of a probability would you assign to that event?
I mean, I think 9-12 months come and go pretty quickly. The real issue is if there are some game-changing moves like a downgrade of the US debt, then what happens in terms of debt holdings of China? Do they make a big difference? I think the answer may well lie in a market that's not been tracked that often, which is the currency market. If you look at the Brazilian market, they've been the worst performing market this year, and they've actually underperformed India as well. But where that fall has been mitigated is that the Brazilian real has moved from 1.75 to 1.56. So the 10% pullback that you've got. So even if you held assets, which may have gone down, I think the index is down almost 14 or 16% for the year, but a lot of that has been made up with the currency move. So my sense is that the currency move may well play itself out, and I think herein lies the answer, that the rupee at 44. When was the last time that you thought you were entering a real bear market with the rupee at 44 and not closer to 49 or 50? So I think the answer lies there. That the euro, people are talking about one Italy, unshackling the euro, if you will. Germany becoming extremely weak on the strength of on the back of what's going on there. But interestingly, the dollar is no safe haven anymore. So the gold has become, in some senses, I personally believe that when people start moving money finally, whether it's the yuan or it's the Indian rupee, these may well prove to be, especially if interest rates remain like this, havens where money will enter. So at some point in time, interest rates will have to start easing off, because just the global rush of money, where you can put into either the equity or the debt markets here, backed by a very strong rupee, will be the bulwark of this entire turnaround. And that, I think, is not a hypothesis that's been built in by anybody. So I'm kind of sticking my neck out when I say this. So the strength of some of these currencies, and I think the RBI's obstinacy in allowing the rupee, not allowing the rupee to go below 44, I think are cause for concern. They just need to let it be. The RBI has done an amazing job, pretty much for the last few decades. But if I had to be a critic, I would probably say that if 22 economists felt that the basis point hike should be 25 basis points, and 2 of them felt there should be no hike, and the RBI comes out with 50 basis points, I'm tempted to say that I think they got their call wrong.
On that dramatic note, we'll thank you, Jakes. Thank you very much for joining in. It is